Okay, now I'm going to jump into this chart right here. What I've done right now is basically the next subject that I want to cover is talking about volumes. And what I'm going to do is I went because there's some more indicators that I need to talk to you about. Unfortunately, the free platform only allows you to have up to 3 indicators, and we're going into, well, actually, it's 4 indicators, but we're now getting ready to go into indicator number 5, which is the volume. And I opened up my chart, and as you can see, that this particular chart, I just want you to get examples prior to what we seen earlier, where a lot of the information was, as you can see, it's pretty much all on one chart, right? And I'm going to click right here first so that you may be able to see what I'm looking at. And let's see if I can completely open this up. Okay, so what we see here is what is called volume, and that's the green and red down low. Volume is important, right? And we haven't got to this particular indicator right here. This is what is called a Bollinger Band. I don't want to take it off because these are advanced. These are charts that I've worked on, and I just wanted you to be able to see a few more. Let's just go to this one. It might show better. I just wanted you to see a few more indicators, and in order to get the other indicators that we're going to talk about, it is possible that you have to pay for at least one of the plans. It could be the cheapest plan, I believe, is $14 a month. It'll give you more, but I would go with, I believe it's the Pro, which is like maybe $29 a month, and it will give you up to 10 indicators. So right now you can do a free 30-day trial that'll give you enough room so that you will be able to place those indicators on the chart as we speak about what we need to be done. Okay? So, um, as we go and sort of look at what's going on here, I want to put this in the day so we can get a better idea. Okay, so then I probably I want to see if I can blow this up, but what I'm trying to do here is prevent myself from having to go to one single chart. But however, I may have to do just that. So let's just do that. Let's just go to one chart. Okay, so here we are with one chart, and we're going to go to a day, and we're going to bring it up to year to date. Okay, so we have the RSI, we still have the stochastic, um, we have the MACD, moving average, conversion, diversion. We also have right here what it appears to be the, let's see, let's see if I can open this up. Okay, so we have the volume right here, right? Now, the volume is important because it shows the amount of people that's in the market. Um, it's important to know the amount of people in the market um, because one thing I talked about in my introductions, 1 and 2, is about what this strategy contains. In order for it to work, it needs 3 things. One of the things I talked about was volatility, the ability for the market to go up and down, liquidity, the ability to get your money in and out of the market. For instance, we talked about the setups that we were looking at earlier, we were looking at setups, and we were looking at setups that were lining up. And when those setups line up, you want to be able to get your money out of a setup that's not working, that you've been waiting too long to happen and it hasn't happened yet. Take that money and put it in a setup. So what we're seeing here is volume. And volume can mean, like for instance, this bar right here could be 1 billion people in this market. You need at least 2 to 3, 40, 50 million people, because that's going to create what is called volatility, liquidity, the ability to get your money in and out of the market. All right. So we need the market going up and down. We need liquidity, right? And we need a amount of people in the market to make this happen, right? So that creates all the momentum. That creates all, the what helps your chart and your strategy work. So there's some more movement. There's some more what is called indicators, and I'm gonna get rid of this one in general. This is Bollinger Bands, and I'm gonna remove it because it's a part of advance, not a part of what is called yeah. So I just removed all that. Now I will go over to our favorites, and let's see. No, that's not it. Our favorites is right here, and we want to put volume back on here. So now we have volume, right? And we can see volume when we can see um, you know, the momentum. It also helps when we're looking at indicators that are overbought and oversold, right? Let's do this right quick. Let's just put this back. I'm gonna put it back, right? And I'm gonna open up this chart because this is where we at, right? Now what you see right here is um, the ability to see the market is overbought and oversold. For instance, when we're looking up here and we see in the market, volume can help us determine and tell that whether this market is overbought. Because, for instance, you see the volume, it looks like it's overbought. You see the volume of people at this point. There's a lot of people in this market, pushing this market, buying this market, right? But as you come here, the market it starts to come down. So while this is up, showing is overbought, right, or oversold. I'm sorry. It's already people getting out of the market, right? And as it starts to go decline here, it's making its turn to possibly head up because look at the value of people are getting back into the market. Are they getting in because the market is going down, or are they getting in the market because it's going up? Are they buying or selling at this point? There's a rally going on. Here's a conversion MACD possibly getting ready to cross over. Is it crossing up or down? But these indicators at this point are not lining up. Let's just show you a classic example of all these indicators lining up. Will be somewhere right here. You can see where the market crossed down to shoot down. You can see where the conversion went down right here. But the market is already going down. And you can see at this point right here where it's at the 80% and it's starting to head down. When those three line up, that's an indication. And then here you can see where the market starts to actually go down like this. Okay? But I'm not going to talk about this little puppy right here. I will tell you a little bit about this. Is called the Bollinger Band. The Bollinger Band pinches, which is showing you that there's getting ready to be a great big explosion. See how it kind of opens up and start to come out, but everything's coming together in this area telling you there's going to be a powerful move. And I used to call this, when it opens up like this, the shark is out the water. And you can see where the market just went down, down. And you see it right here where it turns right here, crosses over, and there's that major down. You can see the conversion goes down. Usually the conversions, you want to pay attention when they're at the bottom and the top. So that's not actually lining up. But this RSI is. It's up at the 80 and it's starting to shoot down. So we have three indicators. We have the volume, that makes four. We have the trend lines. Now we're going to go into what is called moving averages. But one more thing about volumes that we can see, like we take for instance this right here. This is very many people in this market, right? One thing sometimes a value can help out when it comes to dealing with understanding that there may be possibly banks involved when you see there's not a lot of people in this market, but yet and still the market is shooting up. Like right here, if I can blow this up and you can see it a little bit more, you can tell right here that the market just shot up, but look, it's very less people. So it could be banks buying out right here to make this market come up. And then people are getting in the market, rallying in just to sell it off so that it goes down. So I would have needed to be in this market, seeing this about to happen where that the market was getting ready to shoot up, or I need to be right here. So once it shoots up and everybody's rallying in, then the banks sell off their shares and the market starts to go down. This volume would have helped in determining that. That's valuable information.